Sanjiv Bhasin used to be with us. He's still with us, and he has a question for you since you are with us this morning.
Yeah, hi Namrata. It's been a long time coming. 2008, when the first crisis of subprime took place, I remember used to cover it from Delhi when I was in Hong Kong, and that's where our liaison started. So anyway, to put things in near perspective again, greed and fear playing out perfectly. Everyone knows what the China factor is at, and yet most FIs who were overweight have now suddenly realized after a 20% fall that there is fear which is lurking. So according to us, it's a perfect time for buying India, because if ever there's been a case of India outperforming China, it's now. I mean, you could not have better macros. And aside from the volatility, which according to us is your friend if you are able to compass the fear, we think you can't go wrong on India with a slightly longer term view. However, like we said, we think the Dow, 25% of the component is of Exxon and Chevron and a lot of the energy plays. So maybe the Dow actually tends to underperform for some time till this oil imbroglio does not play out.
Sanjiv Bhasin is with us. Sanjiv, you just pointed out the fact that this would be one of the best times for India to outperform. But if there is a liquidity crunch, despite high growth, do you believe a lot of money may not come in?
Well, Pankaj, money is a prelude to valuations. Like we said, at 7,500, if you were waiting, you already have a lot of stocks which are giving you that comfort of valuation. So it's going to be valuation versus liquidity, and that is never a problem. The right money will always find its way. So, like we said, we just conferred with Namrata that yes, Janet Yellen would be in cognizance with this, and maybe that March hike which is proposed could get tapered back to the next quarter. And that itself would, allay a lot of fears. The point which we are making, Pankaj, is that as a brokerage house, we'll always have long-term and short-term ideas. What we think is that the fear is overplayed, and if you are actually wanting to make money, then I think right now at these levels, India gives you a lot of comfort on valuation, stroke the technicals also. So you are right, 75.50 could be breached maybe for a day, but does that mean that the markets have not bottomed out or are close to bottom? I don't think so. I think maybe an extension of this would come when you could break 7,200, but not right now. The speed with which these 5 days have corrected leaves very, very little room on the downside. And on the upside, again, like we said, till globally things don't settle down, there will be volatility. So if you can use this volatility to your advantage, we think this is a brilliant opportunity and a God gift that this has come in the first week of 2016, when all of 2015 you were yearning for a correction. Well, now it is. Now is the time to put your money to use.
Right. Sanjiv, just a word that, the point that you made that, money may come in, flows may happen. But India is already a big overweight market. So don't you think incremental money may not be as thick as it has been in 2014 and the end of 2013?
Well, we've been of that view. If you recall in August when we said that this sell-off is coming, that is when most FIs were caught off guard. And if I saw in my last 20 years, I've never seen FI selling the way it happened in August, September. So a large part of that, dumb money of ETF, which was just following flows and trends, is out. There is just a tranquil amount of money which is going out. By the way, look at the FI flows. There's an equal amount of buying, selling taking place, where new hands are definitely finding the comfort of valuation. So like I said, the volatility is your key. If you were buying at 8,500 and exiting at 75, then for the new investor, it's an opportunity to buy. And like I said, flows has never been a problem. It is just a matter of perception, and that hurried perception that India will, it's not doing 8, it's doing 7 and 7.5. Those are all in the realm. We are seeing a lot of macro improvement. Our fiscal, our current with oil at these levels is only going to be the best ever in last 10 years. So I don't see any call of despondency. Reforms, the bond yields, the repo rate at 6.7 is all giving a lot of comfort. It's just a matter of, your eyes want 8,000 rather than 7.5. That is what will prompt you to buy.
Sanjeev, there's some interesting information coming in from Saudi Arabia as well, that they are, contemplating the biggest IPO in the history of stock markets, which is Aramco. So it's interesting they decide to make a call at a time like this when markets have seen that crash. So if a viewer right now is buying into your theory that this is the right time to buy, let's put money exactly where that money should go. Would you say blue chips given the correction, or would you say excellent opportunities given that correction?
Yeah, good point. I think that Saudi Aramco will be an opportunity of a lifetime because, Namrata, we think, we by the way, as a caveat, we are long on gold and oil at these levels, and we suggest from next week onward, oil from this base has only one way, and that is up. We are not of the view that you would see a further downside. A. B, we think the Saudis have played it well, which you gave the reason, combat of shale gas and other extraneous factors. And we think now with Saudi Aramco, firstly, we would give the caveat that anybody anywhere in the world should subscribe to that, because that would be a dream opportunity. On the flows and the stocks to buy, Namrata, it's a clear winner that large cap discount to mid caps is at an almost 8-year low. Mid caps have moved up very sharply because of inflows from retail and mutual fund buying. And we think large caps have a lot of comfort as far as valuations, as far as visibility, and as far as earning upgradation, which we think can even start from this quarter, starting next week. So we are gung-ho on some of the financials, some of the over-beaten down mid caps, where we see a lot of value on some of the PSU stocks, and we are recommending long-term buys over there.
Sanjiv, I want to play a rapid fire round with you. I'll just ask you some stocks, and you clearly give me your view. If there is a worry, what's the reason for worry, and if you like that name, why do you like that name? Do you like ICICI Bank? Decent correction?
Yes, I think it's one of the few which has held its previous bottom at 242, and there is room on the upside because all of the pessimism as far as asset quality, I think, will be allayed in this quarter itself. We've heard what the State Bank India chief said, and we think ICICI is overblown on the asset quality deterioration. I think there can only be an upgradation. So for us, ICICI and Yes Bank are buys on any decline at these levels.
Right. As far as Maruti is concerned, JP, what's happening in yen? First bit of negative news coming in the last 18-24 months.
Yes, you are right. I would be an avoid over there. Any rally should be used to exit. We think you could get another 5 to 7% downside. The best part of the yen dollar on the positive side has already played through, and we are only seeing the yen strengthen from there, which would hurt the margins because for them any depreciation of the yen is a positive, appreciation is a negative. So I think you should be cautious there, and you could get maybe cheaper levels closer to 3,800 to 4,000 on Maruti.
Right. As far as Tata Motors is concerned, the China problem a little bit overdone.
Surely, it's an excellent opportunity at 350 and below. You cannot go wrong. The US JLR sales and ex-China JLR sales are only surging. We've seen Ashok Leyland come out with a brilliant quarter as far as CV sales go, and we think Tata Motors will only follow suit. We would look for upgradation on the local business, and I think JLR is a win-win situation. So, notwithstanding that the results would be weak in this quarter, we think 350 is a brilliant buying opportunity in Tata Motors.
Right. Sanjiv, TVS as well as Bajaj Auto, two names that have significant exports. Most of their exports go to the commodity producing countries. You think a lot of growth which is estimated from exports for these names may actually have to be revised downward?
Yes, there is a little bit of caution, and plus we've seen that domestic markets, they have seen a slowdown with the advent of Honda on its own and market share erosion. Secondly, I think margins will be under pressure, and like you rightly pointed out, on the export side, particularly Bajaj Auto came out with weak numbers in the last quarter. So for us, the two-wheeler side is an avoid. We are overweight on Tata Motor and Ashok Leyland on the four-wheeler side.
Right. As far as the cement pack is concerned, you put up the JP Associates plant, you put up the Reliance Infrastructure plant and the Lafarge plant that is up for sale. It's almost 10% of the cement capacity here in India. Do you think the buyers may not be there? The excessive supply or the supply concerns in cement may be the theme of 2016?
No, I think the compulsorily de-alienation of debt is not by choice, it's by compulsion. It's not that Reliance Infra or JP could withstand that. There is a lot of pressure from PSU banks, and the new SDR norms are saying you please sell these assets. So I think the assets will be priced at maybe a small discount to what market valuations is, and it will only make the conglomerate of the ACC, Ambuja and the Holcim group get stronger because of this this being picked up by one of the large powerhouses. We are hearing that Shree Cement is in it for the JP side. And for us, any decline in Shree Cement or in Ambuja or Ultratech would be a buying opportunity, because we think this quarter onwards, cement prices should only be headed up. And plus, we've seen, Pankaj, that input costs are at the lowest they have been in the last 3 years. So for us, it's a win-win situation on certain cement players with a slightly, at least a 2-quarter outlook on the upside.
Right. Just sticking with the recovery space, names like L&T, BHEL, basically equipment suppliers. You think a lot of concerns over there because orders are not coming in, and even if they are coming in, the execution is very slow?
Yeah, but I think a lot of that is already in the price. BHEL is not 240, it's 150, and L&T is not 1500, it's 1200. We know the underpinnings of, they indicated that 25% of the business, particularly from Middle East, will be under pressure because of the oil prices and a cut down in budgets there. But I think that's in the price. We think, on the other hand, we think domestic business is looking up very, very positively. Just yesterday, they bagged a big order from ONGC, and I think at 1200, Pankaj, there is a lot of comfort in L&T's earnings, at 23, 24 times. I think it's the cheapest it has been in the last 3 years. So I don't think on L&T you can be wrong on the price front right now. Only, like you said, it translating into earnings may get delayed by another 2 quarters.
Right. The GST beneficiaries like logistics company, maybe some of the consumer durable companies, do you like those names?
Yeah, it's a split verdict. I think the GST is inevitable. It's just a matter of the next 2 months. We've already heard a lot of noise that the Congress has given in. And, that will be maybe a slight bit of a game changer. However, the GST effects will take more than at least 12 to 18 months to play out on the economy. But like you said, some of the consumer names are very well suited to benefit on the upside. Look for any decline in Hindustan Lever on the large caps closer to 800. United Spirits, on the liquor side, on the FMCG fast moving side, we think is brilliantly poised at these levels, and we think the cash earnings are going to surprise only on the upside. So use these declines to buy these 2 stocks. For at least, on United Spirits, we are looking at least at a 60% upside in the next 2 years.
Right. All of these would primarily be on the GST beneficiary side?
GST, consumption, rural income, all those put together, all we've seen is the rural side not pick up despite macros and inflation being at the weakest they have been. I think it's just a matter of time. The translation of the effect of lower rates is being passed on by a lot of the PSU banks, and we should see real income start to rise from this quarter onwards, which will translate into earnings for most of these consumer players.
Right. Yesterday Bajaj Corporation declared its numbers. It's one of the significant player in the rural market. There was a volume miss of 5% in the almond oil that they sell, which is one of their flagship brands. You think that is showing you the intents of the rural slowdown? Maybe 3-4 months more, we can see a rural slowdown coming in most of these companies. So the buying opportunities may come in over the next 5-6 months.
Not even 5-6 months, Pankaj. I think this is a buying opportunity now, and I think it's not translating into earnings because there was a vis-a-vis pass-on effect because of some extraneous factors, the holiday season and so on. If you saw Bajaj Corp's numbers, the margins have sharply risen. In fact, their other income and margins have surprised on the upside. So I think the volume message will be made up for because input costs are low. And seasonally, I think this quarter onwards, you should see a lot of uptick on rural income wage hikes, and plus, the effect of what you call the passage of the banking process of passing on the I'm just slipping the name, what the government has made an extra provision for. And that would be the real kicker, I think, for reigniting a lot of the growth for the GDP and on rural incomes.
Right. Just a word on the aviation pack, Interglobe Jet Airways. Do you like these names?
We like these names, but I think they've run up far in excess of any valuation. And we are of the view that next week onwards, oil should be on a strong bounce back. Now that could have a little bit of a negative connotation, and plus it should halt the almost a perpendicular ride. So we would advise booking profit here, and only we would advocate buys after a steep correction sets in these stocks.
Right. Any disclosures that you would like to make, Sanjiv?
Well, as a brokerage house, we have interest in most of these stocks, no personal holdings, and as a brokerage, we cover these most of the stocks discussed.
Right, Sanjiv, thank you so much for joining us here this morning. Hope you have a great day.